Contingent versus non-contingent is something that we have to address on an Arizona pre-qualification form. So if you're submitting an offer and you're going to be doing financing on that offer, we've got to submit a pre-qualification form, and one of the key boxes that we check on there is whether the offer is contingent upon you selling a current home or not contingent on selling that home. It's basically that you have to sell your first home in order to qualify for the second home.
Okay.
So you might not be able to qualify for both homes, or you may be planning to use the down payment funds from the sale of that home for the new home. So you can't really buy the next home until you sell that first home. You can't qualify.
Okay, so is there anything different in the process of pre-qualification when that's going on?
You just got to take into consideration, the current housing obligation that they're in,
Okay.
and then also the new housing obligation, and then figure out a way, if there's a way for them to qualify for both properties, meaning they don't have to sell that first property before qualifying, then you can check that box as not being contingent.
Okay.
Versus if they do have to sell it, then you do have to check contingent, and then that's going to make a difference in getting your offer accepted or not. Now, where in the past, maybe you could get a contingent offer accepted, they'd want to make sure the home you're selling is under contract and you're far along in the process.
Right.
And then if you're a strong borrower, they might consider that. But these days, there's so many offers. There's probably 3 to 4, 5 non-contingent offers. So your contingent offer, like, hey, I have to sell this home before I buy this home, those aren't really getting accepted in the marketplace because there's too many other solid offers to consider.
How can you get around this contingent offer question if you need to sell your house? Like, what are you going to do?
Sure. So there's, essentially, one is, you got to sell your house first. But a lot of times, what I'll try to figure out and help borrowers do is, hey, let's come up with a plan to see if we can qualify with both houses.
Okay.
And then you need to just figure out or locate additional assets that they have that they can use for the down payment. They may not be thinking of using those assets because they were going to use the money from the home sale.
Right.
But if they can't get that home sale done in time, or if it's not sold yet, sometimes they're just getting ready to list it and the home's not actually sold yet. So that's a key point too, is that if the home is listed and for sale, you still have to check that box because that sale has to close. So what I would do is figure out how to maybe qualify them with other funds for the down payment, and then see if they can qualify for both homes, basically. So a lot of times people come in with the notion that, hey, we want to put this huge down payment down on this new home that we're buying so that it's more affordable, but they don't have access to those funds till they sell the home. So one idea is to figure out a lower down payment, tap into some other funds, and maybe come in with a 5 or a 10% down payment, and then and qualify for the new home with some different funds. Once that home does sell that you're trying to sell, and now you have this large chunk of money, you can make sure that you're getting into a mortgage where they would allow a recast feature. And what a recast feature allows you to do is to pay that balance down with a large sum of money and then recast it based on that newer loan amount. So you don't have to necessarily refinance, and you can just pay most lenders charge $300 to $400 to recast a loan.
Okay.
The minimum recast would be like $10,000, but generally we're seeing borrowers like, hey, I bought this home and qualified. I now sold this home. I've got $150,000. Now I'm going to pay this balance down and have a payment that's similar, that would be similar as if I put that money down in the first place.
Okay. So recast is really kind of changing your payment to reflect the additional lump sum payment you made after the loan.
Correct.
Right?
And yeah, a lot of people aren't familiar with that, and
Yeah.
most people would think you might have to do a refinance in order to do that.
Yeah, I would have assumed that myself, actually. Very good. Well, thanks for explaining all this, Rick. Appreciate that.
Yep, my pleasure.
Okay.